record smashing day really for the equities markets, and Nifty as well as Sensex have both hit all-time highs.
I think the world and the markets are basically saying that the domestic economy is on a stronger footing than the global situation, and I think that's what's now leading the next wave of the move in the market.
Clearly, domestic, institutional and retail investors have come of age. We are in a position to withstand foreign portfolio investors selling.
It's going to be a standout market for the next several years.
Okay.
Could be 2, 3, 5, 10 years. I mean, I don't think any other market will compare, if ticking all the boxes.
10x gains in about 20 to 23 years or so. And we have had a superb wealth creating opportunity.
Yeah.
And going ahead also, I think that it's going to be a fabulous wealth generating machine for the Indian economy, for the Indian public as well.
Hello and welcome to CNBC-TV18. You're watching Bulls Charge Ahead. I'm Reema Tendulkar. With me is Prashant Nair, and these are the headlines on this historic day. The Sensex and the Nifty hit record high levels as the Indian stock markets bucked the global downtrend. The Nifty Bank also hits a new high. Reliance and ICICI Bank lead the charge. Auto stocks see some cheer. Hero Motors says it will hike prices in December, even as it sees sales picking up. Draft rules for scrapping buses over and above 15 years also offer a fillip. Oil marketing companies rally on positive brokerage commentary. JP Morgan upgrades the sector, saying it expects oil prices to stabilize as policy support is turned positive. BPCL, HPCL, IOC gain close to about 4%. India's top insurance regulator says the launch of Bima Sugam is a UPI moment for the insurance industry. IRDA chief Debashish Panda says the one-stop platform, All Things Insurance, will take the insurance industry to every corner of the country and benefit intermediaries. That's an exclusive. In other stocks making headlines, Apollo Tyres zooms 6% after UBS raises the target price on the tyre maker with a buy rating. Ami Organics surges 7% after a definitive multi-million euro pact with Finland's Fermion for a patented pharmaceutical ingredient, while Shriram Properties gains after its acquisition of Suvilas Realty. And it's another record-breaking day on Dalal Street. The Nifty finally hit that intraday record high levels, crossing the previous high of 18,604. The Sensex also touching a new high for the third straight session. The rally in India came at a time when stock markets across the world were fairly subdued. It's climbed all walls of worry over the last 1 year. Prashant is at the big wall, and he's going to take us through India's performance and how the valuations stack up. Prashant?
Thanks very much for that. So we're finally there, right? Sensex hit a high earlier, the Bank Nifty before, and now finally the Nifty high has come as well. About a year after we hit that 18,604 and all the corrections. But what's the journey been like? And this is the table which tells you exactly that. In October of 2021, the market hit 18,604, and then it fell. The first fall was to 16,410. That's about 11% or so. Came back in Jan of 22 earlier this year to 18,321. Had the second fall to 15,671. Bounced in April 2022 to 18,114. And then made the low of the year, the June low, which is 15,183, before bouncing to the high of to 18,091 in September, which is just a couple of months back. And then the final fall of about 6-7% to 16,747. And now we're finally here, 18,614. From October 2021 all the way to where we are now. But even as the Nifty has made new highs, only 26 of the Nifty stocks are below their respective October 2021 levels. That's quite interesting, right? So I decided to take a look. Which are the stocks which have done well? Which are the stocks which have done poorly compared to where they were when the Nifty last made a high? This is the list of winners, and you can see the top gainers. Adani Enterprises, ITC, Mahindra, Eicher. Let's move on, and you'll see a bunch more. Sun Pharma, ICICI Bank, State Bank of India, and Bharati Financial Services finds a strong mention, and so, of course, do a few others. These are the laggards, and a lot of tech here. So look at Wipro, look at Tech Mahindra, Divi's Laboratories is a stock underperformer, BPCL, and there are names like Tata Steel, Hindalco, and HDFC Life as well. Metals, of course, have had it tough. So if you were in the first list, you made a lot of money. If you were in the second list, not so much. You actually were down. But usually it's a mix. It's not this or that. These are valuation. This is the returns, right? We were talking about absolute returns, but this is relative returns in dollar terms. Nifty is down 2.6%, but look at the other markets. They're down much more sharply. What about valuations? So two parts. One, MSCI India versus the emerging market index. And this is the 100% premium that we're talking about. 1 year forward consensus, India trades at 22.5. MSCI emerging market is 11.3 times. So a big premium now at an all-time record. And this is India versus other large markets, and what do 1 year forward valuations look like? For the Nifty at about almost 21 times, S&P 500, the largest 50 stocks in Europe, and the Hang Seng, which of course is bombed out at 8.5 times earnings. So, you know, huge outperformance. The question is, will this continue, and can valuations really cap upsides? Do very high valuations, they don't necessarily by themselves cause a correction, but could it lead the market to actually spend some time for earnings to catch up and maybe other markets to catch up as well? I think that's a question which we will continue to debate. We have Sanjay Parekh joining us. He's founder and CIO at Soham Asset Managers. Sanjay, great to have you back on the program. Thank you very much for your time. So my question is simple. What from here, according to you, Sanjay?
Yeah. So the analysis you've done is so right. I mean, it's certainly insightful. And I just give my perspective. So one is, a near-term reaction that most of them expect, and that can come. I mean, that's absolutely possible. But I think India never had been so good. I mean, in my 27 years, I've never seen a combination of banking balance sheet so good, the corporate balance sheet so less levered, the government fisc in place, and the household balance sheet was always stronger. So this combination of all four balance sheets looking so strong, I think, shows, I mean, that is one of the reasons for this resilience. And India clearly is an outlier in a global where growth is scarce, there are concerns, and we will be the fastest growing economy in the world. Then, of course, some of the things like we have political capital, things like the GST, IBC, which is very, very important. All of them. I mean, you see the whole consumption engine we have, the infra engine. We are here where we will have CapEx spend ahead, and we have the government balance sheet is in place. So all of it is clearly, structurally very, very positive for India in the next 5 to 10 years. Having said that, as you put it rightly, valuations are not cheap. If you compare with emerging market or our averages as well. And we may see some time correction, some price correction, but that's part of the course. In the next 5 to 10 years, it really won't matter.
Sanjay, evening. This is Rima here. Will the FI money come in despite the relative valuation premium of India versus its emerging market peers is double of historical levels? Will the FIs be able to invest in India despite this valuation concern?
Yeah, so Rima, it's a very valid point, but one is a top-down view and one is a bottom-up view. But today also within index, there are some of the stocks which are very expensive, but some of them, I would say very reasonable. So it would be a stock pickers market or themes. There would be, value seekers, and that's how there will be bottom-up, picks that will happen. So as Prashant also recently said, if you look index on 1 year, it's 9%, but the divergence is return is so stark, and you could have never imagined that the top 3 of the top performers are PSUs. So you will see stock picking ahead, and there will be opportunities, and I think that's what global investors will look for. And India is top-down also. It's like a growth stock, which is not cheap. You keep looking for it to come down on valuation, but you don't get that cheap. So I think we fall in that bracket. India as a stock falls in that bracket. And I think that, we'll have some reactions maybe, but that will be a buy or decline longer term. Also, one more thing I want to point out is, let's say fixed income versus equities. Let's say fixed income gives you 8%, further higher from here. But on a post-tax basis, it's still 6%. So then, and Indians are significantly over-invested in other instruments like fixed income, fixed deposits, real estate. And today also in equities, the exposure is less. So just imagine, even if they were to get a 10% return on index and they were to just invest into an ETF, that itself is good enough. And valuations also on 24, yes, we are expensive. But as we move to 25, and let's say if we look at earnings more like 1,080 to 1,100, and if we think India deserved 20 times, then we're talking about 22,000 over an 18-month period. So while it could be back-ended, we could have some time correction and price correction, but over an 18 to 24-month period, we are not that expensive. And I think that is the perspective when global investors would take.
Sanjay, in terms of not building a portfolio, but adding to the portfolio, what are the kind of names with the 2, 3, 4 year kind of perspective that you'd be comfortable buying now?
Yeah, so I think, financials still, I think, the entire financials, even if you buy from today's price, some of the leading private sector names, over a 2-year period will give you very good returns. Even on a 12-month period, you'll see some good returns coming. So we think there is definitely scope there. And we did some work around Bank Nifty around 35,000, and we said, can this double in 4 years? And we looked at the valuation from then from 35,000 to 70,000 in 4 years, and the answer was yes. And it was almost earnings led, and there's not even big de-rating upwards. And we are on the best cycle on the banking side. So that is one area I think there is a lot of opportunity. The second piece is, of course, some of the capital goods, the larger capital names. Some of them are expensive, but still the larger names are reasonable. If you were to take up that utilization level in India are high, there is a capex spend, we will be in a year of elections. And that will certainly, again, qualify. And then, of course, you like to pick up sectors or stocks, because within stock, you get great opportunities, the volatility is high, and then you have to pick up themes. But from our perspective, on entire domestic theme, be it retail, telecom, even real estate, auto, all of it, we think there is a case to be bought at a price, of course, not at current prices. But global themes, IT, pharma, some of the global names, we are a little cautious. I think that theme will remain for a while because world is chaotic, and we will have some impact on the global plays that we are directly or indirectly linked.
Okay, so you've got comfort in the domestic demand plays while you're still uncertain about the companies with linkages to global demand. We've run out of time. Thank you very much for joining in on this special day. Get into a break, but as we do that, here is some expert commentary that we got through the day.
I think markets are discounting most of the positives today. Markets are saying that India will grow much better to the rest of the world next year. Inflation would be under control, and monetary tightening won't happen the way it has happened in the West. So I think markets are discounting a lot of positives. However, at this stage, there are some red flags emerging post the second quarter numbers, and we need to take cognizance of that. The first one is that after a long time, maybe 2.5 years, we are seeing corporate profits starting to decline. EBITDA margins have come below the June 20 quarter now for corporate India as a whole.
Soon as we get more money and we put more into India, plus we diversify. Turkey, we're putting money into Turkey, we put money into Brazil and others. But at the end of the day, India is going to be the bright spot from a long-term perspective. But of course, one constraint for India is government regulation. As you know, for foreigners to come into India, there's some bureaucratic steps that have to take place. And the degree to which Mr. Modi is going to eliminate these barriers will be a big plus for the market. And I know he's working on that. He's program to speed up the improvement or the agreement process is very, very important.
India is a standout market, I think, not just, in the last 1 year or 6 months, but I think it's going to be a standout market for the next several years, could be 2, 3, 5, 10 years. I mean, I don't think any other market will compare, if ticking all the boxes. I'm absolutely clear. There will be obviously ups and downs, that's part and parcel of the game, but at every point out into the future, India will be standing out as a clear outperformer. And, but then the way I invest is that, not always all eggs in one basket. And, Turkey, I bought about 2 months back the ETF, which was 23-24. It's up 40% as a market, in dollar terms in 2 months' time. So that is working out well. I think India and Turkey, if you ask me, both very similar countries, both great industrial powerhouses which have been shadowed by China. They are now, coming into their own. And India, of course, is way ahead on all macroeconomic parameters.
Celebrating Dr. Korean, National Milk Day, 26 November.
As the white revolution came to its fruition, the dairy sector became one of the biggest agri-businesses in India, contributing significantly to the Indian economy. Now, dairy is the single largest agricultural commodity. It has over 5% share in the national economy. The sector has actively created sustainable and alternative employment opportunities in rural India, as it doesn't depend on rainfalls like crop production.
Celebrating Dr. Korean, National Milk Day, 26 November.
What if we could see cyber threats in real life? They would be everywhere, always watching, looking to gain access to our networks, clouds, and applications. Yesterday's technology can no longer stop them, but they can be stopped with consistent cybersecurity that protects work everywhere. Zero Trust with Zero Exceptions by Palo Alto Networks. We've got next.
The innovators who are set to define the next decade. The brightest stars who are making an impact from an early age. And the trailblazers who are disrupting industries of every kind. Celebrating the game changers who are reimagining India's future. Forbes India 30 Under 30 2022.
Okay, welcome back. You're still with us here on Bulls Charge Ahead. And if you're just joining us, we're happy to report that the market did on the Nifty make a new all-time high. We've been talking about that. Let's shift focus and shift gears to the auto sector now. Hero MotoCorp says it will hike prices in December, even as it sees sales picking up. The stock closed with gains of 3%. Rima, tell us more.
Well, it's one of the big movers today, Hero MotoCorp. The company has revised the prices of its motorcycles and scooters from 1st of December. The price hike is to the tune of 1,500 rupees. The exact quantum will vary depending on the specific model as well as the market. This, I understand, would be the 4th hike this year. The previous one was in September, when the price hike was close to about 1,000 rupees. Now, the positive is that the management commentary, when they announced this price hike, seemed to indicate that from here on, there is going to be margin improvement and industry volumes are going to pick up. So this is what the management CFO Niranjan Gupta had to say. He's saying, for one, the upward revision in price was necessitated due to the overall inflationary concern, but they will cushion the impact to the customers by providing innovative financing solution. The company has put in place an accelerated savings program which will help them offset any further cost impact and drive an improvement in margins. So that's what they're gunning for, an improvement in margins from here on. And secondly, on volumes or on demand, the company says moving forward, the economic indicators are favorable to a growth in demand and they expect industry volumes to pick up in the coming quarters. So the news of a price hike is positive for the company's margins, but they're quite confident that despite that, industry volumes will pick up. Now it remains to be seen whether its peers follow suit and go ahead and raise prices. But that's about the auto space. Let's move on to the energy space. Oil marketing companies rallied today on positive brokerage commentary. JP Morgan upgraded the sector, saying it expects oil prices to stabilize as policy support has turned positive. BPCL, HPCL, IOC all up between 4 to 5%. And of course, the big decline that we saw in crude prices also aided the up move. Sonar is here with a roundup.
Yes, and it's very optimistic on the oil marketing space that has not been doing so well so far. So they've gone ahead and they have upgraded HPCL to a buy with a target price of 285 rupees per share. On the flip side, they have actually downgraded GAIL to a neutral with a target price of 105 rupees per share. This note is specifically for oil marketing companies where they say they are turning more constructive on the Indian marketing space. They expect oil prices to stabilize from here on, and there are some downward risks to those targets as well. Policy support for oil marketing companies has turned positive. We are talking about LPG grants being given to these companies, which actually helped them contain losses in the quarter gone by. And now in terms of their marketing segment, which saw big losses in the quarter gone by, their losses are coming down. The diesel segment still seeing some losses, but they have come down sharply, and they are profitable on the LPG and the petrol side. This is a big EBITDA contributor to the company's financials, and that's why JP Morgan is now positive on this space.
Sonal, thanks very much for that. Now, Bima Sugam will take insurance to every nook and corner of the country and benefit intermediaries. That's the word coming in from IRDAI's chairman, Debashish Panda, who also says that enquiries to set up new insurance companies are on the rise. Yash Jain caught up with him in this exclusive conversation. He's standing by to run us through some of the highlights. Yash, over to you.
Well, that's correct, Prashant. So, of course, insurance sector has been in the middle of a lot of regulatory reforms. I had a chance to speak with the IRDAI chairman for about 30 minutes, and I've sort of tried getting all those important points together. So, to start with the vision itself, IRDAI chairman in our interview told us that the vision is to make insurance for all by 2047, to double the penetration in the next 5 to 7 years. And penetration is nothing but premium to GDP. So if the penetration is moving ahead with the vision of getting doubled, then insurance premiums will also be on the rise, and that's a positive for all insurance companies. Apart from that, the insurance regulator has reduced the solvency requirement for the ULIP segment. This is expected to free up about 2,000 crore for all life insurance companies. Also, the solvency requirement in the crop insurance segment has been reduced, and that is expected to free up about 1,500 crore for all general insurance companies. Importantly, on expenses of management, there's a draft paper which is out, and the regulator says that he hopes that the final consultation paper which is out, the industry will be happy with that. And if that happens, then it will be taken up in the upcoming board meeting. That is positive, particularly for the insurance aggregator, that is PB Fintech. Importantly, a new approval has been given for a general insurance company. That happens after 5 years. Shema is the company. Also, a company is very close to getting its final approval, and that is Credit Access. So, of course, that is expected to be taken up in the upcoming board meeting as well. Finally, the last 2 points, as far as life insurance companies are concerned, the chairman has said that there is a possibility going ahead that they may be allowed in the health insurance segment. Positive for all life insurance companies. Also, composite license recommendations have gone to the government. So that is again a positive for these life insurance companies.
After a gap of 5 years, 2017 was the last approval for a new insurance company. And after 5 years, today we have approved an insurance company by the name of Shema General Insurance Company. So that's a matter of great pleasure. And there's another one which is ready. We couldn't bring that proposal because their arrival of the capital will take another 15 days. It's in the pipeline. So that company is Credit Access. We hope in the next board that should also get cleared. And 18 more are in the pipeline. And there are a lot of inquiries regarding setting up of new units. For the unit-linked business without guarantees, the solvency has been reduced from 0.8% to 0.6%, thus freeing up around 1,500 crores. In the past, capital will be released, which will be used for growth by the companies. So we have sent a set of recommendations. Now, the government to consider them. So That's how it is. I don't know when and what time.
You've recommended that a
we have recommended certain sets of recommendations. Yeah, I wouldn't really recall each and every detail right now.
Headline.
But the headline is about lowering of the capital, so that smaller players could come, value-added services, one-time registration.
On composite?
I clearly don't remember. Probably yes.
And with that, it's a wrap on this edition of Bulls Charge Ahead. Thank you for watching.